and let's get started. All right. So we did had some, as I was saying, right, as I said on the beginning of this week, we did had some very directional, market so far on the week. All right, today's Thursday already. We only had one day. We only have one day left. But very directional market. Okay, and that is on my predictions. All right, let me share my screen first here. All right, it's working. Yep. Perfecto. All right. So just talking a little bit about, first let's talk about what I've said on last Tuesday. That is, yes, we are having a very directional approach. Second, I want to introduce you guys for the FinLogic's website. And a big news is that now I'm posting trade ideas in there. So you can follow my trading system. I will show you that in a second. After that, we're going to be having a look on the economic calendar and what to expect for today and tomorrow, and what has been released yesterday, because we did have the FOMC minutes this morning, and this morning for Australia, but probably yesterday for you guys. But in the end of the webinar, I will be looking to go into some pairs, analyzing some markets, some instruments, and then answering everyone's questions. So if you have any question, if you want me to have a look on your favorite pair, let's say, if you want to trade gold, if you trade euro dollar, pound dollar, whatever you trade, just send it on the chat, and then I can have a look at later once we are close to the finishing line. All right. Okay, cool. So first, as I always say, on Tuesday we had I've mentioned that we're not going to have a very volatile week ahead, but we're going to have a very directional week ahead. And that's exactly what is happening on the market. If we look, for instance, euro dollar, and so it's on a direction, all right, it's going up, and it's not like this and this and that. So for pound dollar as well, Aussie dollar as well, gold as well, and some other currency pairs. All right. Now, the big news is that yes, with FinLogix, all right. Let me send this to you guys again. So the website is on the chat, on the meeting chat. But with FinLogix, I'm posting my content, my ideas, my trade ideas, as I say, on here. All right. So you can pretty much follow my trading ideas on a daily basis. Maybe sometimes I don't have trades on a daily basis, and therefore I will have on a weekly basis and so forth. So if you click on the website, right, let me just go into a page. There you go. So if you click on the website, this is the page you're going to land. This is where I get my information for the economic calendar as well. So you guys can come into tools and use the economic calendar. It's very easy to use. Otherwise, here's the latest trade ideas. So if you click on latest ideas, it will pop up just wait. Oh, there we go. So it will pop up all the analysts that post content inside of FinLogix. Raphael seems like to post a lot there. But I'm starting from today, posting my ideas as well. So if you click on the idea, it will open up another page with the trading idea. So the strategy name is ATR020. 020 is the lot size I use. Okay, so I use 020 lot sizes, maximum. My entry point, my TP, my stop loss. The strategy overview. So, after some years of discretionary trading, I've automated my strategy to generate signals to McLeaky and open it to the public now. So I no longer need to manually search for trades. And the way I do this is I use data analysis and methods to identify and capitalize on market opportunities. The risk management side of it is that I only risk up to 1%, maybe sometimes half, maybe sometimes a quarter. It just depends the trade. 1% of my total balance on each trade. This strategy minimizes losses and keeps my profit stable even when the market conditions change. And if you want to join the journey, if you like what you see, then come along on the journey and give me a follow so you can actually follow me. So where is the follow? Oh, you actually have to sign up to be able to follow me. Sorry. So if I click, I can show this on this profile then. If I'm following already him, let me click on Raphael. Yeah, so you can click on follow. Same goes to here. So if you click on my name, you can click on follow, and then every time I get a post out like this one today, you get notified. All right. So yeah, that's the big news. Pretty cool. Now, sometimes every day, sometimes twice a day, sometimes none. So just bear in mind that, okay, and use these as on your own discretionary. Because remembering everything is just an idea. All right. I hope I help you guys doing this sort of content as well. Okay. Now moving on, let me close this and come back to normal. What we just had here. Economic calendar. We did add some jump in there today. Oh, okay. It's 5 p.m., right? I can watch from email link, so I can watch. So what we had here, it's not coming out, unfortunately. Not too sure what was the news. Oh, I can't from email link search. Thanks, Ayn. Thanks again. I will have a look again on that. So we just had a release of the French PMI, and looks like that the manufacturing PMI came in at 42.1, and the services PMI came at 55 out of 50. So French manufacturing PMI was 0.2 lower than expected, and the services PMI was 5.5 higher than expected. All right, and this occasioned a move on euro dollar just at this moment. All right, so now let me come back here. Yeah, this week, perfect. So as we're saying, now let's have a look on the economic calendar, and then we go to have a look on the FOMC. All right. Now, for this week, as I've mentioned on Tuesday, we didn't have anything on Monday. We did had some things on Tuesday, but pretty much the whole thing happening is today. All right, so we had the FOMC minutes at 4 a.m. in Australia. Another thing is FinLogic's market sentiment is nice. Yes, it is very nice. So let me. Okay, there we go here. So you can change to your time. Okay, so don't worry, you can come here and change for your time. Or you can simply just do the math by your head. But it was 4 a.m. Oh, sorry, that's Wednesday. There you go, 4 a.m. this morning. We had the FOMC minutes. Okay. After that, we had the services and manufacturing PMI for Australia. Both of them came in much better than expected. Much expected to be 50.1, it came in at 52.2. For the services and the manufacturing, it was expected to be 47.5 and came in at 48.7. All right. Then at 5:15, we just had now French composite PMI. We had 49.1 expected and came in at 52.7. So that's really good. Now the services PMI went well with expectation of 50.3, but it came in at 55. But the manufacturing PMI didn't went that much. Good, from 44.4 to 42.1. So expected 44, and then The actual came in at 42. So if we have a look at the euro dollar chart, let's just go pretty quick there, and so we don't lose the momentum. Yeah, there we go. So we can see in a smaller time frame as well that we had a big up move, right? Because of what? Because of the services. 55, okay. Better than expected, 5.5 better than expected, but the manufacturing, that is what it actually counts in the end of the day, was pretty bad. And why was it bad? Sorry, and why does that count as pretty bad? Is because manufacturing gives us more work labor than the services. And if you look at these as a economic perspective, then it's not good. Just so you guys know, all right? Now, going forward, 5:30, we're going to have services PMI and manufacturing PMI for German. And that's very, very important, right? As I've always mentioned, the German manufacturing PMI is huge, just because Germany is a big pole of manufacturing cars. I think Volkswagen, BMW group are all there. So most of the manufacturing comes from there, and not only cars, but machinery, heavy machinery is produced in Germany. And the technology there is fantastically good as well. So manufacturing PMIs is definitely a very strong reading for the economy, all right, to see how this economy sentiment is going. So expectation is 43.5 from the previous 43.2. So expecting a 0.3% increase. And from the services PMI, we're expecting a 0.2% decrease, all right, from 52.5 to 52.3. Yeah. Now, and then at 6 p.m., this is all today, please send your YouTube of your recording to us in the Telegram. Thanks. Sorry, I didn't understand that question. Could you do it again, please? The manufacturing and the services PMI, I think the big take for today's would be Europe, especially euro dollar. And we're going to have services and manufacturing PMI at 6 p.m. for Eurozone, Euro area. Okay. The expectations are no changes for manufacturing, but no changes as well for services. But what I'm expecting is that it come lower than what is predicted. So this would make a bearish move on the euro. And even with a very, very weak US dollar, we could see a pullback on euro dollar. But I will talk with that a little bit later as we go on the webinar. And then 6:30, we're going to have composed services PMI and manufacturing PMI for UK. And oh yeah, for sure. Here you go. Manufacturing PMI and services PMI for USA. But that's late on the night, 11:45 p.m. I probably will be sleeping already. Then tomorrow, the only big, would say the only big take is the Japan inflation and the core inflation rate. And of course, the Canada retail sales as well. All right. So that's pretty much what we're expecting from the economic calendar. As I say, Thursday would be the biggest day. And as we can see, Thursday is going pretty hectic at this moment for euro dollar. As we can just come back here. Now we're going uptick again. But, you know, my trade, actually, if you come back to the main page and you look at my trade idea, my short is, my entry is at 111.42.8. 111.42.8. That's my entry right there. And my stop loss is somewhere on the top, 111.8. So yeah, that's my stop loss there. And my take profit is all the way down. So that's a really good That's a really good trading risk reward. There you go. Let me just put this in a 15-minute. That looks better. There we go. Perfect. So that is a pretty good risk reward trade. Probably 1 to 3. Okay. So if we look here, that's 1. Perfect. Let's move this out. So 1 and oh yeah, perfect. 1 to 2. So a 1 to 2 trade, very good risk reward trade. So again, I will be posting this on a daily basis, so you guys can have a look at the FinLogic's website. All right, I've sent the link on the chat. All right, moving on. Let's come back here. Let's say someone is chatting here. Let's see what you guys need. FinLogic's market sentiment is nice. Yes, it is very good tool. Okay, market sentiment. You can find this on here, on the first page, on tools, under tools, market sentiment. What else? Please send your would like to have today's Zoom recording, please. Yeah, so what we do is we upload so today's webinar will be uploaded, the replay will be uploaded tomorrow on the channel. So you can come on the YouTube channel and you can have a look on here, videos, and then you see webinar replay. So this webinar here is from Tuesday's webinar. So you have everything here. All right. So you don't need to stress. It's always recorded. So if you lose a part, if you come a bit late, don't worry. In the next day, you will have on the YouTube channel. Now, as I was saying, yes, market sentiment tool it's a very nice tool. So basically, it shows on what are the sentiment, and with that you can track the trend with a real-time data on both long and short positions. And it definitely generates opportunities, right? So there is plenty and different ways for you to use this in a sense. So let's say 99% of the traders trading NZ US dollar is bearish. Okay, so the signal will be bullish. Euro Aussie again, and so on. Okay, so you can explore the website. It's very good. Okay, coming back now. Right, so yes, we had the FOMC minutes coming out this morning at 4 a.m. It was nothing too crazy. Is it free? Yes, it's free. I can send you the again here on the chat. You can just click on there and you will be able to have a look on that. So as I was saying, so we did add the FOMC minutes this morning. It was long waited, and when it hits the market, it didn't have much to do because the majority of the market already knew what is going to be said on the minutes. Keep in mind that this minutes is from the 31st July meeting. Okay, therefore it's a very delayed data. All right. It's a very delayed data, but it's still very helpful and it's still very good. So if we go to FOMC website, okay, I will send this link to everyone so everyone can follow up with me. Pretty much you have all the minutes and since 2019. So if you want to get back to 2019, you can click here and then you're going to have all the meetings from 2019. All right. Now, what actually matters for us is the statements and the press conference and the minutes. Now, the statement is due on the date of the rate decision. Okay, it can't be on the next day or it can't be a day before or anything like that. It has to be done. So it has to be published, sorry, on the day of the rate decision. So if it comes out that the rate decision was on the 31st of July, then the statement has to come on the 31st of July. But the minutes don't have to come on the 31st of July. The minutes sometimes take up to a month. Sometimes can take up to 20 days. It just depends how the FOMC will scrutinize and see what is being, what has been said, and how they will put this all together to the public. Now, we got the minutes today from the 31st, so we're going to have a look on that. So you can just click on HTML, or either way you can download as well. So you can, there's pros and cons. If you download the PDF, sometimes it can be very heavy. So if your computer don't have much space, then it's going to be a problem in a few, after you download a few of them. But with the HTML, you can't highlight any area that it's most interest. But let's just have a look on the HTML for today. Okay, so that's the press release. That's what I say about this statement. So this statement was released on the 31st of July. For release at 2 p.m. EDT, and then it is here what they've decided on the day. And that's a very, very, very simple. Okay, so when the whatever central bank chairman we're talking about, in this case we're talking about FOMC from the Fed, we're talking about Jim Paul. So when Jim Paul comes and give his speech afterwards, when the rate decision has been decided already, usually 30 minutes after, 15 minutes after, it just depends. The first phrases that he will say, oh, there it goes, euro. Perfect. So let me just bring the chart here. Perfect. There you go. Yeah, that's a very good trade. All right. So whenever the first phrases that he say will be towards what is reading here. So he's basically reading. So I don't know if you guys ever saw these, but whenever he comes into stage, you can actually look at here on the press conference. So if you click on press conference, this is going to be the press conference from see the paper there. So that paper is this, right? So basically he's reading this. So recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have moderated and the unemployment rate has moved up but remains low. Inflation has eased over the past year but remains somewhat elevated. In recent months, there has been some further progress towards commits 2% inflation objective. So that's exactly what he's going to read. Same for this paragrapher and the last two as well. Not these. Voting for monetary policy action, he doesn't read these. But let me just share this audio. How can I share the audio here? Just a second. I have to share my screen again and share sound. Perfect. All right. Okay. Let's just do these. I will try to divide in two screens. So perfect. All right.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone.
So basically, it's the exactly same thing, but of course, in different rewording. Okay, he's not exactly reading this, but anyways, I thought it would be fun to show you guys that, so no one is lost around. But yeah, so and then afterwards they release the minutes, and the minutes is something that is really good for us, so we can actually understand what they've talked inside of the meeting, because we don't have access to those meetings, right? We don't have access. So let me just come back to the economic calendar here, because we're having a huge move on euro dollar. Economic calendar. We got the release for Thursday. There we go. So what do we got? German composite services and manufacturing PMI. So as I say, Germany is always really big and there's always a really big impact. So services PMI came in at 51.4 from the consensus of 52.3, and the manufacturing PMI came in at 42.1 from the consensus of 43.4. So there is a big change on the consensus and on the actual, right? And this is what is making this move. So these are the types of trading I will be giving out on FinLogix, so you guys can always be following the trades. All right. Now coming back for the minutes, that's the third time I tried. Anyway, so when they have the meeting, we can't actually see. It's not live. It's a private event for the Federal Reserve members. But later on, as I said, we can have the minutes, and that's a very important report for us traders. We can understand what they have talked about inside of this meeting that we don't know what they've primarily talked about. So inside of the meeting, they will primarily discuss how is the staff economic outlook, what are they looking for the economy in the future, on the near future, on the longer future, and etc. Interest rates, that is one of the most, if not the most important projections that they give to us, because this is when we know when they will probably cut interest rates or they will maintain the interest rates. It just depends. All right. Now, let me get back to here. Perfect. Okay, so first they start talking about developments in financial markets and open market operations. That doesn't really interest us. Okay, it's just OMOs, open market operations. What really interests us, because there is a lot of things, right? You don't need to read all of these. Some of these things are not necessary for us. Okay, trading Forex, what you really need is, come back up here, just a second, there we go. So you need the economic situation, right? What are they thinking about the economic situation? The financial situation, sometimes depending, we don't need these for this month. And most important, economic outlook, and this is it. So you just need to read economic outlook, and the first one I say the economic situation. All right. So let's have a look here. Let's have a look at the economic situation first. So I've made a blog this morning. So if you go with on the ACY website, go into learn and then market analysis. Go to Luca. There you go. Here we go. So understanding the latest FOMC minutes, insights into the financial markets, economic outlook, and inflation trends. So I've made the whole, I've summarized it. I've read all of these and summarized for everyone. So there is one thing that really caught my attention, right? When they say about the yields, right? So if we look, one of the notable shifts was treasury yields, where the shorter term yields, like the 2-year yields, decline more than the longer term counterparts, like the US 10-year yields, leading to stiffening of the yield curve. What does that mean? Okay, so let's go into US 2-year and US 10-year yields. Let me grab it here, US 10, and let me add the US 2 years. Perfect. Put into a line chart. There we go. Okay. This is a daily chart, okay? So it's enough for what we need. So see that most of the time, the majority of the time, we are looking at US 2-year yields on pink and 10-year yields on blue. Most of the times they have, most of the times they have exactly same movements, okay? Ups, up, down, it goes down, up again, up again. But what happened on July? Okay, so on July, we had a really big discrepancy. So the 2-year yields was going down as the 10-year yields were going up. This is very rare to happen. Very rare to happen, okay? Because as we can see, most of the times they work exactly together, right? It's 90% of the time they are exactly happening the same. They're not going one up and another one down. It may take some time for them to go up and let me just put this back here. It may take some time for them to go in some direction, but they're always going into the exactly same direction. Okay, so in this case, they were going in different directions. So one of them were going up, another one of them were going down. And it's not like just a little bit, it's a fair bit, all right? So from 4.1% all the way down, sorry, 4.5% all the way down to 3.92%. So that's a 0.5% drop. So 50 basis points drop, okay? As of the 10-year, they were in 4.3, and then later on in the stage, they dropped to 3.8, okay? So that's another 50 basis points drop. Again, yes, they tend to be, if one dropped 25, the other one will drop 25. But what happened here is that the 2-year yields were dropping 50 basis points and the 10-year yields were raising 10 basis points. Okay, so that was the difference. And that made me think, okay, so if they touch base on this sort of, in the minutes, if they touch base on this sort of content, then yes, they are watching it and they are literally doing market operations on top of the government yields. And then I thought it would be important to note that this change in the yield curve often signals investors' expectations of future economic conditions, with sensitivity to economic data such as the consumer price index and employment reports remaining high. Okay. In some instance, we have these gaps here, as I just presented to you all on the chart. But if we look on the equity markets, we did have a pretty strange reaction, right, since the last meeting on the 31st of July. So on the equity markets they were pretty much anticipating the September cut, and that was very pronounced towards the whole assets. All right. So if we look for smaller stocks, they are much more sensitive towards interest rates. They saw notable gains, and while the larger companies like Microsoft, Apple, Nvidia, etc., they play a particular that they are pretty big on technology sector. They underperformed those smaller stocks, and this divergence between the smaller stocks and the bigger stocks highlights how the impact of the monetary policy expectations can occur in different market segments. All right. So if we look now to the CME Fed Watch tool, let it just load. Let me give a sip on the water, guys. All right, perfect. So if we look at the 18th of September Fed Watch 2, the probability is skewing. Okay, so we had, I don't know if everyone remember, but last Tuesday, not Thursday, Tuesday, we had 80% for a 25 basis point cut and 20% for a 50 basis point cut. Now we've increased within a week, we've increased 16%. Right, so right now it's 36.5% chance of a 50 basis points cut and a 63.5% of a 25 basis point cut. There was a time that this was 50-50, and I don't see this coming back to 50-50. Majority of the market don't see this coming back to 50-50, but I just don't understand the reason why there are market participants expecting a 50 basis points cut from the Fed, even though we had, yes, I know what some people may say, because NFP is coming lower because CPI inflation is coming lower as well. Yes, the reading is coming lower, but that doesn't mean that the market is cooling down, because if we look in a broader picture, inflation is still high, unemployment is still high. What about the dual mandate that the Fed always say that they do and they're so proud of it? Well, it's not working so well, right? Because unemployment is still at 4.1, 4.2% in that area. NFP came in very bad last, this month, for last month. We still inflation very high, and and then it goes and goes and goes and goes, and it adds up. So I do believe that this is like an illusion. Looking at this right now and looking at the market expecting a 50 basis points cut, it just doesn't work like that. Okay. Now, coming back at the FOMC meeting minutes, what I thought it was important, it was the economic outlook. So I'm just going to read this through with everyone, so you can take some notes if you like to. But they are forecasting, the staffs are forecasting for the month of July, in the meeting of July, a lower rate of resource utilization over the projection period relative to the forecast for the previous meetings. So what they mean that is they don't have that much data as they had in the previous meeting, right? I don't think it's true, but whatever, right? They can say whatever they want to say. So the outlook for growth in the second half of 2024 has been marked down. Okay, so now it comes, right? If the outlook for growth has been marked down, largely in response to weaker than expected labor market indicators. Oh, really? Don't tell me. So NFP is coming lower. Unemployment rate is still very high. And now you guys think that, yes, the GDP will underperform in the second half of 2024. Last year was a different talk. Last year, they were saying that in 2024, they would be the best year. Well, they changed the words again, okay? As they say, as a result, the output gap at the start of 2025 was somewhat narrower than it had been previously projected, although still not fully closed. Over 2025 and 2026, the real GDP growth was expected to rise about in line with potential, leaving the output gap roughly flat in those years. The unemployment rate was expected to edge up slightly over the remainder of 2024 and then to remain roughly unchanged in 2025 and 2026. Well, there we go. I think what's most important is this last line here. The unemployment rate was expected to edge up slightly over the remainder of 2024. So the unemployment rate is expected, all right, and then to remain roughly unchanged in 2025 and 26. So we may see more unemployment coming from even more from 4.2 maybe to 4.5. We don't know, but that's what they're saying here. So with that, we can already expect a weaker dollar on the second half of this year, right? So those minutes, yes, they give a lot of insight into whether the US dollar will be strong or will be weak, or how we're going to proceed with the US dollar, how much risk we will imply into the US dollar. Okay. Now, just the last thing I want to chat about the minutes is here. Let me bring through the policy actions. So in support of the committee goals to achieve maximum employment and inflation at the rate of 2% over the longer run, members agreed to maintain the target range for federal funds rates at 5.25% to 5.5%. Members concurred that in considering any adjustments to the target range for the federal funds rate, they would carefully assess incoming data, the evolving outlook, and the balance of risks. Members agreed that they did not expect that it would be appropriate to reduce the target range until they had gained greater confidence that inflation is moving sustainably towards 2%. In addition, members agree to continue to reduce federal funds reserve holdings and treasury securities and agency debt and agency mortgage-backed securities, the famous MBS. All members affirm their strong commitment to returning inflation to 2% objective. So that doesn't mean anything, but whatever. This last line, I mean, okay, the all members affirm their strong commitment to returning inflation to 2% objective. Yeah, it's just someone saying, do you want to bring inflation down? Yeah, I want to bring inflation down. Okay, so let's write down that everyone wants to bring inflation down. I think that's everyone's job in there, but whatever. So as they say here, so the members are considering any adjustments to the target range for the federal funds rate, they would carefully assess the incoming data, and that will involve the outlook, the balance of risks as well. And they did not expect that it would be appropriate to reduce the target range until they had gained greater confidence that inflation is moving sustainably towards 2%. Now, I would love to ask the question, how confident they are to bring inflation down to 2%, and in what sort of period as well. With that answer, we could know if they are looking to cut anytime soon or not. All right, so that was pretty much, and then all the rest of the minutes are who voted, if voted for hike, if voted for cut, etc. All right, we don't need to go off through all of that. Now, did everyone understand the point of the minutes? Did you guys have any questions towards that? No questions? Okay, that's good. That's good. All right. Now let's have a look at some charts. So if you want me to do an analysis for any chart, please just send through. I'm just gonna go through euro dollar here. But yeah, so euro dollar, pretty confident that if we break, let me go for 4 hours. Okay, coming back here. Okay, so I'm pretty confident at if we break this level of 111, we may come back towards this area, all right? And if we break this area down here, then we will come back to down there. But my first target would be these lows at 111, and as well is a key level, okay? Every time we have something like this, let me change the color. So 1.10, 1.11, it's a round number. It's not like 1.10725. It's like a 1.10 and this is it, or even 1.0. That's a very strong key level. Okay. So this is very good. So if we break through this level, it just shows to me that sellers are getting into the market. I think I've seen you a couple of times. Review on how to get your euro dollar on FinLogix. Review on how to get your euro dollar on FinLogix. Augustine, what do you mean by how to get your euro dollar on FinLogix? You mean copy this trade idea in your account? Is that what you mean? Oh, okay. So yeah, you can't. So all right. If you come back to FinLogic's first page here, you can't actually copy these trades exactly the same way inside of your account. It's not an automatically, like it's not a copy trading, okay? We just post ideas on here. So a little bit different of what you may be thinking of. But yes. All right, pound dollar is, someone have a Aussie dollar first. So let's go for Aussie dollar. Yeah, so I think it was Sweets that asked about the Aussie dollar last time, or Centi, can't remember now. But anyways, so yes, I've talked about Aussie dollar reaching this level of 67,800 somewhere here. Yeah, there we go. So we're very close to that level, but still, as I say, we had this very sharp move on the market. Let me get my pen. We had this very sharp V move recovery on the market. It doesn't look good because, you know, we had this such big move down and then now such a big move up. But we may continue to go with strength towards a 62.8, all right, around these levels, just because we're going to break through this high point. And then we have, yeah, that would be my target for Aussie dollar. What else? GBP NZD. GBP NZD, wow, that's a tricky one. Okay. Pound New Zealand. Yeah. Okay, that looks really good trade, actually. So, see, most probably, Gambo, Suleiman, you were on Tuesday's webinar, and I've been talking about those boxes. And what I do is I try to target those boxes on the 50, so on a half of the box, 50% of the box. And we've just broke through these sort of pullback, let's say, here. Now, what I would wait is if we break through this pullback, this low point here on 211, let's say, I would be chasing I would be chasing this target here.
I'm looking from the bottom up. So let the girls know to continue.
All right.
It's tedious, but okay.
All right, guys, I think that's all for today. Does anyone have any questions left? We still got 5 minutes. Thank you. Not a problem. All good. No questions. DXY. Yeah, DXY. See, we've just hit 7-month low on US dollar index. I think was Tuesday, if I'm not wrong. Yeah, Tuesday. So very hard to see that little man recovering anytime soon. New Zealand dollar. Yeah, definitely. Let's have a look on New Zealand dollar. NZD USD. NZD USD. Okay. Yeah, so as I say, right, we've just hit 7-month low on US dollar index, and that is leading to very bearish moves on the US dollar. So the move that we're seeing right now on euro dollar with this retracement is not the US dollar getting strong, it's just the euro losing some strength. Once the US dollar, well, probably tomorrow afternoon in London session, we're gonna still have a stronger euro, but most probably next week we may have a pullback on the DXY, and that will make all the other market pull back as well. But for New Zealand dollar, I continue to expect a continuation of an uptrend and targeting this box here. So leveling the 62,400. Okay. So if we look here, 62,400, 62,400. There we go. So that's going to be my target for New Zealand dollar. But just remember that we have a very strong resistance here on this area. Okay. So yeah, still we just broke this resistance here. So if we pull back, come back somewhere around 61,500, we may see a continuation up to 62,400. All right. Don't you think they could get back up soon? Nah, I don't think so. So what do you think could happen if the Fed's flat rate floor index weakens? Yeah, it could continue to weaken even more, most probably, because it just depends on it's not about rate cut. It's about how they will follow up the rate cut. How bullish or how hawkish or how dovish they will be. All right, guys. Thanks everyone. I will be here again on next Tuesday 5 to 6, and this is the new time for Thursday's ones as well, 5 to 6 p.m. I hope everything is working fine for everyone. If you have any questions, please just send me a message on the Telegram, and I will be looking to answer everyone. Thanks, guys. Thanks, guys. Have a lovely weekend ahead. See you all. Bye bye.